All right, today we're going to try and solve a puzzle that has a lot of investors scratching their heads. We're talking about RZLV, an AI software company. See, when you look at the company's numbers, they are absolutely screaming growth. But then you look at its stock price, and it's telling a totally different and, frankly, much sadder story. So what is really going on here? Let's get into it.
Okay, so this slide just lays out the whole contradiction perfectly. On one hand, you have the market's opinion. The stock has gotten hammered, down more than 60% from its recent highs. Ouch. But then, on the other hand, you have the company's potential. Analysts are projecting a mind-blowing 712% revenue growth by 2026. So how can both of these things possibly be true at the same time? To figure that out, we need to zoom out a little.
First things first, we've got to understand the neighborhood Rise lives in. It turns out, this company isn't in a vacuum. Nope, it's caught in a pretty nasty storm that's hitting the entire AI software sector. You could almost call it a classic case of guilt by association.
And that right there is the key. The whole AI industry kind of has a split personality right now. You've got some parts, like data storage, that are in a full-blown bull market. But AI software, it's getting crushed. It is a bear market, plain and simple, for this specific corner of the industry, and RZLV is stuck right in the middle of it.
Now, if you want proof that it's the whole sector, just look at ServiceNow. I mean, this is wild. The company did everything you could possibly ask for. Unbelievable earnings, great guidance for the future, even a huge stock buyback plan. And what happened? The stock still went down. It just goes to show you that right now, it almost doesn't matter how good your company's news is. This negative wave is just pulling everything down with it.
So this brings us right to the core question of this whole thing. Is RZLV's stock getting hammered because there's something fundamentally wrong with the company itself, or is it just an innocent bystander getting caught in the crossfire of a brutal market downturn? Well, as we're about to find out, the real answer is probably a little bit of both.
Okay, section 2. Let's completely ignore all that market chaos for a minute. Let's flip the coin over and look at the other side of the story. ZLAV's absolutely explosive growth potential based on its own numbers and what the experts are projecting.
And this number, this is the number that really defines the paradox we're talking about. 712%. That's the kind of insane revenue growth analysts are predicting. That number tells you this is a company firing on all cylinders, which just doesn't line up at all with how the stock is being treated.
So let's talk about how cheap it is. Right now, the stock is trading at a price-to-sales multiple of just 3. What does that mean? Well, in simple terms, its entire value on the stock market is only 3 times its yearly revenue. For a tech company growing this fast, that's not just low, well, some people would say that's just absurdly low.
In fact, you've got analysts out there arguing that based on its growth, RZLV should be trading somewhere between 10 and 20 times its sales. Now, if they're right, that means the stock isn't just a little bit on sale, it is deeply, deeply undervalued. All right, on to section 3. Here's where we get to play detective a little bit. We've got this brutal market sentiment on one side and these explosive company fundamentals on the other. So let's look for the hidden clues. We're going to look at the biggest risk hanging over the company and, more importantly, where the so-called smart money is quietly placing its bets.
Now, before the good news, we have to talk about the elephant in the room, stock dilution. This is when a company issues more shares of stock, which can make each existing share a little less valuable. They usually do it to raise money, but for RZLV, it's been seen as the biggest company-specific problem because it creates a lot of uncertainty for investors who already own the stock.
Okay, now things start to get really interesting. This chart shows us the short interest. That's basically the percentage of people betting that the stock price is going to fall. And at over 22%, yeah, that's high. There are a lot of doubters. But look closer. That number has recently dropped from 25%. That could be a sign that some of the biggest bears are starting to give up and close out their bets, which is often a very positive sign. And this, right here, might be the most compelling clue of all. We are seeing big money players, we're talking institutional investors, making some very aggressive bets that the stock is going to go up. They're buying call options, with some betting the stock will go past $15 a share. For them to even make their money back, the stock has to climb above $16. That's not just a small bet. That is a huge vote of confidence from people who do a ton of homework.
So, all of this brings us to our final section, and back to the main event. You have the market's negative story versus the company's positive numbers and these huge bets from big money. So, what's going to give? When do the numbers, the fundamentals, finally start to matter more than the market's bad mood?
You know, there's a classic saying on Wall Street, and it really sums up the optimistic case for RZLV. The idea is that market feelings, sentiment, That stuff is temporary. But strong performance, real numbers, that's real. Sooner or later, a gap this huge between a company's price and its actual value is supposed to correct itself. The billion-dollar question, of course, is when.
And in the end, that leaves us with this final, massive question. Because the story of RZLV is really just one chapter in a much bigger story about the entire AI software industry. Is what we're seeing just a temporary storm that's going to pass, revealing some incredible buying opportunities? Or are we looking at a permanent climate change in how investors think about and value these kinds of companies? The answer to that question is going to decide the future for a whole lot more than just one stock.